Today, I want to answer the question, is long-term care insurance a waste of money? The other day, someone commented in one of my videos, this dude is obsessed with long-term care costs. Don't worry about it. Well, I'm obsessed with long-term care costs because it's one of the biggest unknown variables that has the ability to derail your retirement plan. Many retirement plans work well until I add in the possibility of long-term care, and then the plan falls apart. And if you think I'm being overly cautious, here are some numbers from Morningstar to consider. 48% of people turning age 65 today are going to need some type of paid long-term care services in their lifetime. Nearly 25% of people, 24% of people turning age 65 today are going to require 2 or more years of long-term care costs. Now, the cost of long-term care is going to vary greatly depending on which part of the country you live in. If you live in New York today, the median annual cost for a private room is around $159,000 a year. That same room in Monroe, Louisiana, cost around $64,000. But most people retiring today, if you take into account inflation, should estimate around $350,000 for 2 years of long-term care. And for women, that estimate is low because women who require long-term care, their average duration is 3.7 years. For men, it's about 2.2 years. If you want more specific data, I'll put a link in the description. There's a study from Genworth on the cost of long-term care specific to your area. So today, I want to answer the question, is long-term care insurance a waste of money? But first, my name is Kevin Lum. I'm a certified financial planner, and this channel is dedicated to helping 1 million people retire without worry. Now, for years, long-term care insurance was a steal. It was a great deal. Often people ask me to review their old long-term care policies, and they'll say something along the lines of, I'm thinking about getting rid of this policy. I'm not sure if I should keep it or if it's worth the money. And I'll review the policy and my mouth will drop open because it's a great deal. For years, long-term care policies were a no-brainer. But the problem is insurance companies were losing money and they way underestimated the cost, the usage, and the length of long-term care. So they've since updated their actuarial tables, and traditional long-term care insurance, in fact, all long-term care insurance, is much less attractive. So today, as I answer the question, is long-term care insurance a waste? I want to begin by talking through the various long-term care insurance options because there is a broader market now than there used to be. And I want to give you some of the alternatives to purchasing long-term care insurance. Then I want to give you a framework. There's a lot here today. I want to give you a framework for understanding whether it's a waste of money. And then finally, I'll show you a tool to help you kind of get an idea of what long-term care insurance might end up costing. Sound good? So let's start with looking at the insurance option. So the first option is just traditional long-term care insurance. You pay an annual premium, and then at some point in the future, if you have an inability to do a certain number of ADLs, the insurance company will pay out. And often there is a policy limit, like, they'll cover $200 a day for 2 years or $200 a day for 4 years or whatever the case might be. Now, some of the pros is that the coverage can be fairly comprehensive. Often there'll be an inflation protection rider ensuring that the value of the coverage kind of keeps up with the cost of long-term care over time. There are also some tax benefits. Premiums may be tax deductible and the benefits you receive are normally tax-free. Now, the problem is, some of the cons, is that premiums can rise over time, sometimes substantially. Might not be a huge issue when you're still working, but once you retire and you're on a fixed income and you've been paying for this policy for 15 years and the price of the premium increases dramatically, it's going to be really hard for you to maintain coverage. Another issue is it's use it or lose it. You've been paying for this long-term care insurance for 20 years. You don't need long-term care cost. All that premium is lost. Another issue is underwriting. To qualify for traditional long-term care insurance, you have to go through a medical underwriting process, and those with pre-existing conditions may either face a higher premium cost or actually denial of coverage. And this is one of the questions, right? When do I get long-term care insurance? Because the longer you wait, the more likely that you might be turned down. And so in recent years, as the cost of traditional long-term care insurance has risen, you've seen some hybrid policies come out. The first hybrid policy combines a life insurance policy with long-term care. So there'll be a long-term care rider, and this will allow the policyholder to use part of the death benefit for long-term care expenses. And if you don't use the long-term care, your family will receive a death benefit. So it might work something like this. You buy a permanent insurance policy. If you need long-term care, you'll receive $300,000 in benefit. And if you don't, your heirs will receive a $100,000 death benefit. So there tends to be a larger payout if you use it for long-term care as opposed to a death benefit. But there are a variety of ways that these hybrid life insurance policies can be constructed. So some of the pros is it serves a dual purpose. You have both a permanent life insurance policy, which will pay out some benefit to your family, and you have long-term care. The other benefit is your premiums are typically guaranteed. So they are fixed and guaranteed not to increase. So you kind of know what the cost of coverage is going to be. The other benefit is there's a return of premium. If you don't use the long-term care policy, then your beneficiaries are going to receive a death benefit, and all the money you paid into the policy, they'll receive back. Now, there are some cons. The premiums on these policies can be more expensive. In fact, significantly more expensive than, say, a standalone life insurance policy or a standalone long-term care policy. The other issue, and this is an issue for all the hybrid policies, is they can be incredibly complex and hard to understand. Also, the long-term care benefits you receive with a hybrid life insurance policy may not be quite as rich or as good as you might receive with a traditional long-term care policy. Another hybrid policy that's beginning to emerge is a hybrid long-term care and annuity. And these are annuities with a long-term care rider that increases the amount of available income if you need long-term care. So to give you an example, you fund an annuity and that annuity pays $1,000 a month in income. Then if you need long-term care, that payout could be increased. So it might go from $1,000 a month to $3,000 a month. Some of the benefits is it's going to provide you with a guaranteed income stream, which can be increased if you have long-term care needs, which is kind of nice. You just know that I've got this amount of income that's going to come in. The second benefit is the underwriting is much simpler. It's much easier to qualify for one of the hybrid policies than it is to qualify for traditional long-term care insurance. But there are also some downsides. One of the major downsides is it requires a large upfront amount of cash and you tie up some of your liquidity. So you have $100,000 sitting in a retirement account. Now you take that $100,000, you give it to an insurance company and they dole out a little bit of money over time, but you lose a lot of liquidity. The other issue with annuities, not just long-term care annuities, but just annuities in general, is that you're going to have a lower rate of growth. Most people would be better off, and when I say better off, I just mean the amount of money that you would have if you took that $100,000 and then invested it in a diversified portfolio over the long run. You're going to have a larger pot of money historically at the end than you will putting it into an annuity. Now, there are benefits to an annuity, but that is beyond the scope of this video. The other issue is that just like with the hybrid life insurance policies, hybrid annuity contracts can be incredibly complex and difficult to understand. And policies vary a lot from company to company. Traditional long-term care insurance is largely fairly standard, but hybrid policies are not standardized. Each carrier's policy is different, and so you really have to read your contracts very closely and very thoroughly. Now, one side note, if you choose to go with a hybrid life insurance policy or a hybrid annuity, you may be able to use a 1035 exchange and take an old annuity or an old life insurance policy and transfer it into one of these policies that offer a long-term care rider. One other note in the insurance world is I'm starting to see more and more shared care options. So if you're married, what will happen is a couple will have a shared policy allowing you to use a pool of benefits. So if one spouse needs more than the other spouse, you can take some from one spouse and use and share that benefit. Some of the benefits is it just allows for a lot of flexibility. If one spouse uses up their benefit, they can tap into the other spouse's benefits. And that's particularly important because men tend to use less benefits than women, partially because they die earlier. Women tend to need more benefits, and so they can share that benefit. It's also often more cost effective than purchasing two separate policies with a high benefit limit. But there are also downsides, like there is for everything else. One person could end up exhausting the entire benefit, leaving the other spouse without any coverage at all. It also just complicates planning and just takes a lot of careful planning to make sure the benefits are allocated effectively. And it adds a layer of complexity, but it also adds a more cost-effective option for someone who's considering insurance, but is trying to lower their cost as much as possible. Now, some of you watching have decided, I do not want to use insurance. Now, there are also some creative ways to pay for long-term care. Some people use their HSA account, because HSAs are incredibly tax efficient. You get a tax deduction when you put the money in, the money grows tax free, and then when you pull the growth out, it also is tax free. And so it has a triple tax advantage, which makes it very tax efficient. And so if you have a large HSA balance, or you plan on having a large HSA balance, you could either use that to cover some of your long-term care cost, or you can use that to pay for long-term care premiums, and those long-term care premiums qualify for that tax-free distribution. Another creative option is using home equity. And there's a couple different ways you can tap into your home equity. You could either use a HELOC or use a reverse mortgage. And so if you decided, look, I don't want to do insurance, but I'm a little nervous if I'm going to have enough money to cover long-term care costs if I need it, but I do have a significant amount of equity in my home, then you could tap into that equity using either reverse mortgages or a HELOC. And so it's kind of an escape hatch. It's a backup plan. Hopefully you won't have to use it, but you know it's there if you need it. And then there's the favorite option in my comment section, Medicaid. Some people are planning on allowing Medicaid to cover their long-term care needs, even if they know that the coverage is suboptimal. The problem is, if you're married, this could have significant implications for the healthy surviving spouse. It could limit the amount of income they can earn. It can limit the amount of assets that they can hold, and that amount is going to vary by state. And it's also going to limit the amount of home equity that they're allowed to have as well. That also varies by state. But the problem is, if one spouse needs care and you go on Medicaid, and there's another healthy spouse who does not need care, it could have some really serious implications for the healthy spouse who doesn't need care yet. The final option, and this is where I often will lean, is just build it into your financial plan. I'll often estimate $350,000 per person for someone retiring today for 2 years of coverage. But honestly, that's going to depend on location. That could be a little high and that could be a little low. But as I said earlier, I'll put a link in the comments to a study by Genworth, which gives you a better idea of what long-term care costs in your particular area of the country. So now I want to return to the question that I started with: is long-term care insurance a waste of money? And I want to give you a framework for thinking about this. I think there are really 3 groups of people. The first group are people with significant amount of assets. If you have a large nest egg, chances are if you need long-term care, you can just pay for it out of your nest egg. And you would be better off taking those long-term care insurance premiums and investing it in the market. You'll probably end up with a larger pile of money later in life. The second group of people are people who are just living paycheck to paycheck. And there are a lot of retirees who basically just live from one Social Security check to the next. And they don't have any extra room in their budget to pay for long-term care insurance, particularly when it's not fixed, right? They can't count on that cost not increasing. And if that's you, chances are your best bet is going to be using Medicaid or home equity or something else to cover your cost. Once again, long-term care insurance probably doesn't make sense. But then there's a third bucket, and that's kind of the mass affluent. You don't have a massive amount of money, but you also want to be able to leave some sort of legacy to your family, or just want to make sure that all your bases are covered. You can afford the long-term care insurance premiums, and it just provides some peace of mind and also helps secure your legacy that you want to leave to your family. If that's you, long-term care insurance might actually make sense. Now the question becomes, what does long-term care insurance cost? Well, I've got some good news. I have an insurance partner called Back9 that has a great online platform that can allow you to run quotes. So in just a minute, I'm going to show that to you, and I'll put a link for you to play with it in the show notes. Now, one quick caveat. Technically, using this link, you could go ahead and apply for long-term care. Please don't. If you are interested in any of the policies you see, I can connect you to our partner at Back9 Insurance, or find someone locally. I just don't think you'll have near enough information just from going through this quick little online questionnaire to apply for any of these policies. So for a number of reasons, don't actually apply. But if you are interested in one of the policies and you want to talk to Back9, just go ahead and send me an email and I will connect you, or find someone local that can help you run a quote. Okay, so here we are in the quote page. So we got Phil Dunphy. He's male. He's in good health. He's never used cannabis or nicotine. We're going to skip height and weight. Doesn't matter for this, at least this quote piece. Birthday, January 1st, 1960. You're going to click on the long-term care button here. And then you're going to see you have some options. So Phil Dunphy wants long-term care coverage at age 85, equivalent to $5,000 today, compounded at 3% annually. You can play with that and change the compound amount, which will impact the price. How long of coverage do you want? Do you want 2 years, 4 years? And then Phil is single and wants to pay monthly for life and lives in the state of California. And then you can see the various options. So traditional long-term care insurance is going to be $282 a month. Linked benefit, which is a hybrid policy, is going to be $718. And then link or life with chronic long-term care is $843. I believe this is tied to an IUL. So you can see the difference in prices. As I said, it's significantly more for a hybrid policy. So then you can click in here if you want to see more about that particular policy. That one is from Thrivent, but you also have from National Guardian Life and Mutual of Omaha. And both of these say that no physical exam is needed. So you might be able to get around underwriting. If Phil now is married, he wants to apply with his spouse. So Claire Dunphy, married, female, preferred, never smoked. And then we'll just give her the same birth date and see what that cost will be. So one of those policies dropped away. Okay, I'm going to leave it there. I hope that link was helpful to some of you. If you are interested in understanding what long-term care insurance costs, again, please don't apply. If you're interested, find someone local or email me and I'll connect you with Back 9. But I don't know enough about long-term care insurance from one video for you to purchase any of those policies. But I personally like being able to kind of play with and understand pricing before talking with an insurance agent. So hopefully it will help you. One thing I hadn't mentioned is some people will use a QLAC, a qualified longevity annuity contract, to pay for long-term care insurance. About a year ago, I did a video on QLACs. I haven't watched it. It may be awful because it was early in my YouTube career. But if you're interested in knowing a little bit more about qualified longevity annuity contracts, you can watch that video now.